Good morning, everyone, and welcome for today's training sessions on corporate tax in UAE. This session is designed to enhance your knowledge and help you apply corporate tax concept effectively in your work. It's my pleasure to introduce our speaker for today, Ms. Danya Rajesh. She is a Federal Tax Authority tax agent and the director of RDS Accounting. With her extensive experience in corporate tax and SME advisory, she will be guiding us through the fundamentals of corporate tax, focusing on its applicability on SMEs and basic calculations related to tax. This session will run for 1 hour with 45 minutes dedicated to main discussions and 15 minutes for the Q&A sessions at the end. So I encourage everyone to take note and save your questions for the question and answer session. So now let's hand over it to Ms. Danya to begin her session. Welcome, Ms. Danya. Ms. Danya, not audible to me.
Thank you, Nita, for the introduction and welcome everyone. As mentioned, today's session is all about the understanding the basics of the corporate tax, particularly how it applies to the SMEs. And since corporate tax is now a reality in the UAE, it's very crucial that we, as accounting professionals, have a strong grasp of the fundamentals so we can support our clients effectively. We'll cover key concepts like who is subject to the corporate tax, the taxable income, the basic tax calculations, and the compliance requirement. The goal of this webinar is to make sure each of you walk away with a clear and practical understanding of corporate tax so that you can confidently apply this knowledge in your work. Now, let's start by first understanding the agenda. So, I'll be covering the overview of the corporate tax, the key definitions, the rates which is applicable for the corporate tax and the exemptions, free zones. We will not be covering the entire free zone because it will take many hours. So I'll be just giving you the basic concepts, the relief which is applicable, then the tax group and the compliance requirement. So let's see what is corporate tax. As you all know, it's a direct tax and it's not a personal income tax. So it's directly applied on the business profit. So whoever has a profit above 375,000 in a year, 9% corporate tax will be applicable on the excess of that 375,000. And unlike VAT, which is paid on a quarterly basis, this will be paid on annually basis, like yearly basis. So, for example, let's say if your corporate tax period, as per the corporate tax certificate, is Jan 2024 to December 2024, then you are supposed to pay and file the corporate tax return by September 2025. So that is like you are getting a 9 months grace period from the end of the financial year, which is December 2024. Whereas for the VAT, we have like 28 days as a grace period. Here we are getting 9 months grace period. So we have enough time to prepare the books to close, finalize. If you want to go for an audit, you can do the audit and then go for the corporate tax return filing. And if you ask me like why UA has introduced the corporate tax, so it's like to comply with the normal international norms and the best practices and to attract businesses to start their new ventures in the UAE and to accelerate the development and transformation of the country. So in addition to the oil income, this is another income for them. And effective date of the corporate tax is from June 1st, 2023. So it started from June 2023. But the first filing has already completed for some companies. Like in December 2024, there was for some companies. Then now for the Jan-December tax period, it's coming in September. Regarding the registration threshold, so for the VAT, as you all know that there is a threshold limit to get registered for the VAT, which is 375,000, which is mandatory, and 187,000 voluntary. And it's calculated on the turnover, not on the profit. But here, there is no registration threshold as such. So all the companies which has a license in the UAE must mandatorily get registered for the corporate tax. Unless you are a sole establishment, which is considered as a natural person or an individual, you can say. So if in case of individuals, there is an exemption for the registration, which is if their revenue is less than 1 million in a year, in a Gregorian calendar year. That means here we follow Jan to December Gregorian calendar year. So let's say a natural person or an individual's revenue is less than 1 million. He's not supposed to get registered and there is no corporate tax payment for him. So this exemption is only for the natural persons. Rest, all of them who has a license in UAE, whether they do the transactions, whether they make profit, that is not the point for the registration threshold. So there is no threshold as such. If you have a license in UAE, you have to compulsorily get registered for corporate tax. Then the authority which controls the corporate tax is same as the federal tax authority. So the collection of corporate tax, management, and everything is done by the federal tax authority itself. As per Article 1 of the Corporate Tax Law, it says about the definitions. So here I have taken only 4 definitions, but as per Article 4, Article 1, and there is a 6 pages definition, which describes each and every terms which is covered in the CT law. So here I have just taken the 4, which is corporate tax. As you all know, that is a tax on the taxable person. And taxable person means it can be a resident person, which is resident in the UAE or residing in the UAE, or it can be a non-resident person. So both are subject to tax. Then comes the qualifying income, which is specifically for the free zone. So for free zones, their entire income is not taxable. Only the non-qualifying income will be taxed at 9% and qualifying income will be taxed at 0%. And there is a definition for exempt persons, which is purely for the government entities and the public entities. Now let's see what are the rates applicable. So for the corporate tax, there are 2 rates, which is 0% and 9%. So up to 375,000 profit. It's not the revenue or the turnover, it's profit, net profit. That is after deducting all the expenses, which is allowable as per the corporate tax law. So up to 375,000. So let's say we are getting a profit of 400,000. So up to 375,000, there is no tax payable. It's 0 rated. And on the balance, which is 25,000, there will be a 9% corporate tax payable by the company. So this is how corporate tax calculation works. And the 0% applies on the qualifying income. As I mentioned before, this is only for the free zone, qualifying free zone people. So it can be a company in the free zone. There are 7 conditions, which is mentioned in the corporate tax law. So a company who fulfills all the 7 conditions will be treated as a qualifying person. If that is the case, then their company's entire profit will be 0 rated. Like there is no corporate tax payable at all. And if there is any non-qualifying income by the free zone persons, then on that portion, 9% will be applicable. Now let's see who are the exempt persons. So there are some categories which is exempted by the government, by the Federal Tax Authority from the corporate tax law, which is the government and government control entities, then extractive and non-extractive businesses, and qualifying public benefit entities like charities, non-profit organizations, schools, etc. And here you can see the definition. Before we have seen the definition for the taxable person. Here I will tell you what is a resident and non-resident person. So resident person can be a juridical person and the natural person. So juridical person means a company, purely a company. It can be LLC, LLP, whatever it is, like that, the company, purely a company. Natural person means sole establishments. So company registered as a legal entity has a sole establishment that will come under the natural person. So sole establishment is not considered as a company. It will be treated as an individual. So residents, there are two categories, companies and individuals. Then non-resident, there are again two categories, PE in UAE, that is a permanent establishment in UAE. So for example, a foreign company has a PE in UAE, means it has to pay a corporate tax. So there should be a fixed establishment, like a fixed office has to be there. Income has to be generated from that company, from that place. Then it will be treated as a PE, and it's a long definition, so that we'll cover in another session. Then another income which is taxable is the UAE sourced income. So whatever revenue they generate from the UAE is taxable for the non-resident. As of now, the UAE, there is no withholding tax. It's 0% as of now, but maybe in future they can introduce a percentage for the UAE sourced income as well. Now I will tell you basics of the free zones. In detail, we will have another session for free zones as well. So Article 18 talks about the free zone persons. So as I mentioned before, qualifying all the companies in the free zone are treated as qualifying free zone automatically they will be under the qualifying free zone category. But then again, there are some conditions to be treated as a qualifying free zone. So the first condition is substance in the sense they should have a proper office in the free zone, and they should have employees who is managing the operations. Then there should be fixed assets like the buildings or the computers, tables, furnitures they should have in the office. So if there is a substance only, it will be treated as a qualifying free zone. Then comes the income. Income, say whatever they generate has to be a qualifying income to be treated as a qualifying free zone person. So qualifying income, again, there is a list provided by the Federal Tax Authority in the CT law. Again, that we'll cover in the coming sessions. Then the pricing. So whatever pricing they do between the related parties and all, it has to be done on the transfer pricing rules, like based on the transfer pricing. Then it should maintain audited financials. So every year their books has to be audited by an auditor, and this is a mandatory requirement to become to be treated as a qualifying free zone person. Then the qualifying free zone person should not be elected for the corporate tax at 9%. So if a free zone person want to opt for a qualifying free zone person, then they should not opt for the 9% corporate tax. Then there's a de minimis requirement. So de minimis requirement, again, there is a calculation for, so whatever a free zone person can have both qualifying income and non-qualifying income. So it can have transaction with free zone, outside free zone, overseas. So out of this, some income are treated as non-qualifying income, and this non-qualifying part should not exceed some limit. That's what de minimis requirement talks about. Then it need to be a juridical person. Like as I mentioned, it should be a company. So a natural person or an unincorporated partnership cannot be treated as a qualifying free zone person. So you will see licenses which is taken from a free zone but registered as a establishment, then it will be treated as a natural person. So they cannot be a part of qualifying free zone person. So a company, a free zone person, to be treated as a qualifying free zone person, all these 7 conditions has to be fulfilled. If any one is missing, then it will automatically be considered as treated as a non-qualifying free zone, and they should file the corporate tax in the normal in the standard rates, like what other companies in the mainland do. In the same way, even the free zone company has to file the return if they are a non-qualifying free zone person. So talking about the deductible expenses, what FTA says, wholly the expenses which is wholly and exclusively incurred for the business purpose, you can deduct. So let's say if there are some expenses which is for the personal purposes, you cannot deduct it from the corporate tax, like from the profit. for the corporate tax purpose. And it should not be capital in nature. For example, if you buy a building, or if it's a machinery which is treated as a part of fixed asset in the balance sheet, it cannot be deducted as an expense from the profit which you generate. But here, the depreciation part you can deduct as an expense, or the amortization, whatever related to it, we can deduct. And the interest on the loan, if let's say if a company is taking a loan and there is an interest, again there is a capping, there is a limit for the deduction which we can do. So the limit is like either 12 million or 30% of EBITDA. So there is again another calculation for that. I will cover it under another session. Then again, the customer entertainment expenses. So whatever you do for the customer entertainment, if you arrange an event for them, 50% of the total cost can be deducted and 50 will be disallowed. Then comes the staff entertainment. Staff entertainment is 100% deductible. Then there are some non-deductible expenses as per Article 33, which clearly mentions what are the expenses which is not allowed to be deducted from the net profit when you calculate for the corporate tax payable amount. So it's like expenditure not incurred for the purpose of taxable person's business. Again, it can be a withdrawal by the owner. It can be a dividend. So those expenses are not deductible for the corporate tax purpose. Then expenditure incurred in deriving exempt income. So exempt income, let's say dividend income. If a company is getting dividend from another UAE company, it's exempted. It's an exempted income. There is no corporate tax payable on that. So if there is any expenses incurred for getting this income, then that expenses we cannot deduct. Then comes the losses not connected with or arising out of the taxable person's business. So if let's say a person has two companies, and this person is gonna deduct the loss of one company, company A, into company B, that is not deductible. And it should be directly related to this taxable person's business loss. Otherwise, it's not deductible. Then comes the donation, grant, or gift made to an organization that is not a qualifying public benefit entity. So a company can deduct the donation if it's given to an approved approved association. But if it's not a qualifying public benefit entity, then whatever donation we give, like to an individual, we cannot deduct it. And any fines and penalties, which is not deductible. Then comes the dividends, as mentioned, the profit distributions, then the amount withdrawn by the person, like the natural persons, like an individual. Then corporate tax provision, which we create in the P&L, that is not a deductible expense. Then the recoverable input tax, which we are already claiming from the FTA by filing the VAT return. So that is again not recoverable while doing the corporate tax calculation. Then the tax on income imposed outside the country, outside UAE. So let's say if a company has another company in Saudi, whatever tax they pay there cannot be deducted as an expense here in the BNL. Then the contributions made by the employer to a private pension fund. As of my knowledge, we don't have anything as of in this situation. So again, this is another expense which we cannot deduct from the net profit. Then there's a concept called tax groups. As per Article 40 of the CT law, it says that a parent company with a subsidiary companies can form a tax group. So there are some conditions to be met before they form a tax group. That is like the parent company should hold 95% at least to of subsidiaries to form a tax group. So where this condition is met, they can form a tax group, and the benefits out of forming this tax group is they need to file one tax return, that is a consolidated return, and transfer of losses between the subsidiaries can also be done. So let's say a parent company has 2-3 subsidiaries, and these one of the subsidiaries is making losses every time, then it can be adjusted with the profit of another subsidiaries, since they are filing only one consolidated return. Then comes the relief. So there are certain relief which is applicable to all the companies. But if it's a qualifying free zone, again there are some restrictions. So if a person, if a company is treated as a qualifying free zone, then these relief are not applicable. So the first one is small business relief. So this is actually applicable for majority of the companies like SME companies. So what small business relief says is, if your revenue in a year, let's say Jan to December 2024, the revenue is less than 3 million. So if the revenue is less than 3 million, you can opt for a small business relief, even though your profit is above 1 million. So before I mentioned that corporate tax is calculated on the net profit, which goes beyond 375,000. But in case of small, if you are opting for small business relief, even though if your profit goes beyond 375,000, there will not be any corporate tax payable to the government because the company is opting as a small business relief because their revenue is less than 3 million. And this relief is only available for the first 3 years, that is 24, 25, and 26. So after 26, like from 27 onwards, this relief is not applicable. So even if a startup or a SME is making revenue less than 3 million, they will have to comply with all other like return filing, payment of corporate tax, everything will be applicable to them. So only the first 3 years they will get this benefit. So whoever has a revenue less than 3 million can opt for the small business relief. And it is not available, as I mentioned, it's not available for a qualifying free zone person and multinational enterprises. Then the next one is the qualifying group relief. The third one is business structuring relief and the natural person relief. So qualifying group relief and business structuring relief, again, it's a like huge topic. So again, I will cover it under another session. But natural person, talking about the natural person relief, it's applicable, it's available to an individual. Let's say a person who has a sole establishment and his revenue is less than 1 million, even though profit goes beyond 375,000, he doesn't have to get registered and there is no corporate tax payment for him. So these are the main small business relief and natural person relief are the main relief which is applicable for the SMEs and the startups. They can utilize this. But a point to note here is if you are going forward with the small business relief, the disadvantage is if let's say in 2024 a company made a loss, his revenue is less than 3 million and he made a loss. This loss cannot be carried forward in the next year, which is 2025. So when you advise a client also, what you have to say is, if first you have to check what is his revenue. If it's less than 3 million, then check what is his profit or loss. If it's a loss, then advise him not to go for the small business relief option, because here if he opt for it, he cannot carry forward the losses. And if he doesn't opt for it, he can carry forward the losses and he can set off with the next year's profit if the company is making the profit in the next year. Here is an example of how to compute the corporate tax. So company XYZ is a UAE based business with the following financials. So its revenue is 1 million. The expenses is 600,000. So then taxable income, the net taxable income after deducting all the expenses will be 400,000. On this, up to 375,000, as I mentioned, it will be zero rated. So there is no corporate tax payable on 375,000. On the balance, which is 25,000, a 9% of corporate tax, which is 2,250, will be payable for that company. So this is how the corporate tax calculation goes. This is a basic one. Again, comes the loss adjustment, any other relief if you are opting. So there are some adjustments after this, but otherwise this is a basic computation. Then comes the compliance requirements. So first of all, a company, as I mentioned, they should get registered. So already registrations are completed by December. Now comes registrations for the new company. So let's say if a company is going to take a license in December, Jan, Feb, and all, they can register in the following months. And point to note is a company, let's say it's registered in February, they have taken a license in February. Before 3 months, they should get registered for the corporate tax. So now that is a condition for the new companies. So registration, as I mentioned, almost all the registrations are done and it was a mandatory registration. Then now comes the tax returns. So tax returns, again, it has to be filed from the 9 months from the end of the financial year. So let's say if it's December, then by September, we have to file the corporate tax and make the payment before September 30th of 2025. So if companies want to go for audits, then they have ample time to do that, this 9 months time, and then they can go for the corporate tax filing. As I mentioned before, like for the qualifying free zones, audit is mandatory. So they can go for the audit and then do the corporate tax filing. But again, note that corporate tax is not directly calculated on the net profit, because net profit, whatever we calculate for the audit purpose, we are taking all the expenses which is related to the company. And when we from this net profit, we have to add back some expenses which is not allowed by the corporate tax law. We have already discussed that non-deductible expenses. So out of the books, we have to do this corporate tax calculation, and it's not directly from the audited financials or the in-house financials. Yeah, my clients used to ask like whether the corporate tax is directly paid on the net profit of the one which we get from the financials. No, it's wrong, because there will be some expenses which we have to add back, like fines, donations, and all. We have to add back. So out of the books, we have to do all these calculations and then make the payment for the corporate tax. Then comes the accounting and record keeping. So this is a mandatory part. Accounting is compulsory for all the companies. Even if there is no transaction in a company, there will be some expenses like trade license cost, the visa cost, etc., which we have to prepare a financials on based on these expenses. And we have to maintain these records a minimum of, not minimum, at least for like 7 years, we have to maintain these records. And if we are getting a mail or a notification from the FDA on the 7th year saying that you need to keep the records again for additional 2 years, then we have to keep addition for the additional 2 years. So altogether 9 years we have to keep the records. And accounting, bookkeeping, everything has to, accounting has to be done on based on the IFRS. And if it's for these SMEs, then we should follow the SME IFRS. Then comes the audited financials. As I mentioned, like it's mandatory for only for qualifying free zone persons, not for all the other companies. So for other companies which is in mainland or any other companies other than qualifying free zone person, they can do an in-house financials, because we need to calculate the corporate tax. So for that, we need an in-house financials. So that can be done and then file the corporate tax. But for the qualifying free zone persons, audited financials is mandatory. So every year they have to do the audit, even if there is transaction or not. Then there will be penalties, like if for failure, if you fail to file the return on time or make the payment, there will be penalties. So it's better to do everything before time, not to wait until September, because towards the end, there can be a lot of other issues coming up. So you won't be able to manage the filing and payment. So let's keep like by April or March, you finish all the filings, or maximum by May, you finish all the filings, so that the client will get time to arrange the funds and make the payment by September. So now we can have a Q&A sessions. Whoever has questions, you can just raise your hands and then I'm happy to answer you.
Well, ma'am, there is a question already in the chat box.
Just a minute. Is audit mandatory before filing? So, as I discussed, audit is only mandatory for qualifying free zone persons. It's not mandatory for other companies. So, before corporate tax filing, you don't have to do any audit. You can just prepare the in-house financials. Based on the in-house financials, arrive at a net profit, then take the net profit for the corporate tax calculations, do all the adjustments, then find out the corporate tax payable amount. Any other questions? This session, I have just covered the basics for you to get an idea on the corporate tax. And detail one, we can do it in coming session. So I will have a session for the small business relief, natural persons. For the free zones, I will have separate sessions. Yeah, so I have another question, which is on based on small business relief. The question is small business relief is up to 2026. So if we start a business in 2026, then will I get this relief only in 2026? Yes, it's correct. You will get this relief only in 2026. This is just to support the startup and SMEs. They have given this 3 years, which is 24, 25, 26. So if you are going to start a business in 2026, you will get this relief only for that first year. And as I mentioned, it's better not to opt for the small business relief if it's a loss making company, because you won't be able to recover these losses in the coming years, like adjust these losses in the coming years profit. Maybe you can unmute and ask the questions instead of typing. Another question I have here is how many years will be able to carry forward losses? Is it possible to set off total losses against CT? Yes. So losses can be carry forward infinite. So there is no time period. We can carry forward these losses for any number of years. And is it possible to set off total losses against CT? So if you have profit in the upcoming years, the previous year's losses can be set off. But then again, there is a condition like 75% of the profit in the current year can only be adjusted against the loss, which is carry forward. But the balance 25 you can adjust in the upcoming years. But there is no time period as such. Is there any other questions on how to compute the tax, or the expenses which are deductible? Yeah, so I think everyone is clear about the corporate tax basics. Thank you all. Thank you for your time. Thank you for attending this webinar.